The best investment decisions are made before the money is invested. Here's what every investor should understand before making their next investment decision. What happens if an issuer defaults? How does security protect your investment? What legal rights do investors have? How should you evaluate risk before investing? And what common mistakes should every investor avoid? In this video, we'll simplify advanced FAQs on risk management and investor protection for GHL India asset secured NCDs, giving you a clearer understanding of how these investments are structured and managed. Let's begin. One. What happens if the issuer defaults on its obligations? A default occurs when an issuer fails to fulfill its obligations under the terms of the secured NCDs, such as payment of interest or redemption of principal in accordance with the debenture trust deed and other transaction documents. While GHL India Asset is committed to meeting its obligations in a timely manner, it is important for investors to understand the framework that applies if a default were to occur. This is one of the reasons why the secured NCDs are structured with multiple layers of legal protection and independent oversight. What happens if a default occurs? If an event of default occurs, the matter is dealt with in accordance with the debenture trust deed, the debenture trust agreement, the debenture subscription agreement, applicable provisions of the Companies Act 2013, other applicable laws. The specific rights and remedies available depend on the terms of these documents and the applicable legal framework. What is the role of the debenture trustee? Upon the occurrence of an event of default, the debenture trustee may, subject to the trust deed and applicable law, review the circumstances surrounding the default, engage with the issuer to understand the reasons for the default, communicate with the debenture holders where required, exercise the rights and remedies available under the trust deed, take appropriate action for the benefit of the debenture holders in accordance with the governing documents and applicable law. The trustee acts independently and within the scope of its legal and contractual authority. What about the security created for the secured NCDs? The secured NCDs are backed by security created over identified immovable property. If an event of default occurs, the security may be dealt with in accordance with the debenture trust deed and applicable laws, subject to the rights and procedures prescribed therein. The existence of security strengthens the legal framework supporting the investment, but should not be interpreted as a guarantee of recovery or repayment. Does a default automatically mean investors lose their money? No. A default and a permanent capital loss are not the same. The outcome depends on several factors, including the nature of the default, the value of the secured assets, the remedies available under the transaction documents, the applicable legal process. Each situation is assessed based on its own facts and circumstances. Why does GHL explain this? At GHL India Asset, we believe investors should understand not only how an investment performs under normal circumstances, but also the legal framework that applies if unexpected events occur. Transparency strengthens investor confidence. Important clarification. A professionally structured investment is not judged only by how it performs during favorable conditions, but also by the legal and governance framework available if challenges arise. Some investors assume that a default automatically results in a total loss. In reality, the legal consequences of a default depend on the transaction documents, the security created, the value of the secured assets, and the applicable legal framework. A default activates a legal and contractual framework, not uncertainty. The debenture trustee, the security structure, and the governing documents together provide the mechanism through which investor rights are addressed in accordance with applicable law. The true strength of an investment structure is measured not only by its returns, but also by the legal protections it provides when challenges arise. Important note. A secured NCD provides legal security over identified assets, but it does not constitute a guarantee of repayment. The rights of debenture holders in a default scenario are governed by the debenture trust deed, the transaction documents, and applicable laws. Investors should carefully read the offer document and trust deed before investing. How does the security cover help protect investors? One of the distinguishing features of GHL India Assets secured NCDs is that they are backed by security created over identified immovable property. The purpose of the security cover is to strengthen the legal framework supporting the investment by creating a security interest in favor of the debenture holders through the debenture trustee. The security cover is intended to provide an additional layer of investor protection. However, it should not be interpreted as a guarantee of repayment or as eliminating investment risk. What is a security cover? A security cover refers to the security created over specified assets to support the obligations of the issuer under the secured NCDs. At GHL India Asset, the security is generally created over identified immovable property in accordance with the debenture trust deed, the debenture trust agreement, the security documents, applicable provisions of law. How does the security cover protect investors? The security cover strengthens investor protection by 1. Creating a legal security interest. A charge is created over identified assets in favor of the debenture trustee for the benefit of the debenture holders. 2. Supporting the secured nature of the investment. Unlike an unsecured borrowing, the secured NCD is backed by specifically identified assets forming part of the security package. 3. Strengthening investor rights. If an event of default occurs, the security provides a legal framework through which the debenture trustee may exercise the rights available under the trust deed and applicable laws. 4. Enhancing investor confidence. The existence of identified secured assets demonstrates that the investment is supported by tangible assets rather than relying solely on the issuer's repayment promise. Does security cover guarantee recovery? No. The existence of security does not guarantee full recovery or repayment. The actual outcome depends on several factors, including the value of the secured assets at the relevant time, the terms of the security documents, the applicable legal process, the rights available under the debenture trust deed. Accordingly, investors should understand that a security cover reduces risk by strengthening the legal position of debenture holders, but it does not eliminate investment risk. Why is security cover important? Professional investors generally evaluate the quality of the secured assets, the legal enforceability of the security, the governance framework, the role of the debenture trustee, the adequacy of the security structure. These factors collectively contribute to the strength of a secured investment. Important clarification. A security cover strengthens the legal protection available to investors. It is an important safeguard, but it is not a substitute for prudent investment evaluation. Many investors believe that secured means risk-free. In reality, a secured investment provides legal security over identified assets, but it does not eliminate market, legal, operational, or execution risks. A security cover provides a legal mechanism that supports investor protection by creating a security interest over identified assets. While it enhances the strength of the investment structure, it does not guarantee repayment or eliminate investment risk. Security strengthens investor protection. Sound governance strengthens investor confidence. 3. What legal rights do investors have if the security is enforced? The legal rights of investors in relation to the security created for the secured NCDs are governed by the debenture trust deed, the debenture trust agreement, the debenture subscription agreement, the security documents, the Companies Act 2013. Other applicable laws, the security is created in favor of the debenture trustee, who acts for the benefit of all debenture holders in accordance with the trust deed and applicable laws. Accordingly, if enforcement of the security becomes necessary, the rights of investors are exercised through the debenture trustee in accordance with the contractual documents and the applicable legal framework. Who enforces the security? Individual investors do not normally enforce the security independently. Instead, the debenture trustee acts on behalf of all debenture holders and exercises the rights and remedies available under the trust deed and applicable laws. This ensures a coordinated and legally structured enforcement process. What rights do investors have? Subject to the terms of the transaction documents and applicable laws, investors are entitled to the benefits of the security created for the secured NCDs, representation through the debenture trustee, information and communications as required under the trust deed and applicable laws. Such rights and remedies as are available under the transaction documents and the applicable legal framework. Why is this structure important? Having a single debenture trustee act on behalf of all investors provides uniform representation of investor interests, efficient coordination during enforcement, consistency in legal action, better governance and administration. This approach is generally more effective than each investor pursuing separate legal action. Does enforcement guarantee recovery? No. Enforcement of security is a legal process. The outcome depends on several factors, including the value of the secured assets, the applicable legal procedures, the rights available under the transaction documents, or other relevant circumstances at the time of enforcement. Accordingly, enforcement should not be interpreted as a guarantee of full recovery. Important clarification. Investor rights are protected through a structured legal framework in which the debenture trustee acts on behalf of all debenture holders in accordance with the trust deed and applicable laws. Some investors believe they can immediately take possession of the secured property if a default occurs. In reality, enforcement of security follows the procedures prescribed in the trust deed and applicable laws and is generally carried out through the debenture trustee. The rights of investors during security enforcement arise from the transaction documents and applicable laws. The debenture trustee acts as the common representative of the debenture holders, providing an organized and legally structured enforcement mechanism. A well-structured investment protects investor rights through legal processes, not through assumptions. Compliance note. This answer provides a general overview of the legal framework applicable to secured NCDs. The specific rights and remedies available to investors depend on the terms of the executed transaction documents and the applicable laws in force at the relevant time. 4. How should investors evaluate risk before investing? Every investment involves risk. Therefore, before making any investment decision, investors should undertake a balanced evaluation of both the potential returns and the associated risks. At GHL India Asset, we encourage investors to perform their own due diligence and fully understand the investment structure before investing. A prudent investment decision should be based on facts, documentation, and risk assessment, not solely on the advertised rate of return. What should investors evaluate? Before investing, investors should consider the following. 1. Understand the business model. Investors should understand how the company generates returns, the nature of the underlying business, the investment strategy, the source of repayment. An investment should be understood before it is undertaken. 2. Evaluate the underlying asset. For secured NCDs, investors should understand the nature of the identified immovable property, the quality of the asset, the location and development potential, the commercial rationale behind the investment. 3. Review the security structure. Investors should understand what security has been created, who holds the security, the role of the debenture trustee, how the security supports the investment structure. 4. Understand the risks. Every investor should identify market risk, legal risk, regulatory risk, execution risk, liquidity risk, credit risk. Understanding risk is as important as understanding returns. 5. Review the investment documents. Investors should carefully read the offer document, the debenture trust deed, the debenture subscription agreement, other relevant transaction documents. These documents explain the rights, obligations, and terms of the investment. 6. Evaluate the governance framework. A prudent investor should understand the role of the SPV, the role of the debenture trustee, the security structure, the reporting and monitoring framework. Strong governance is an important element of investment quality. 7. Evaluate the post-tax return. Investment decisions should not be based only on the coupon rate. Investors should also consider applicable taxation, TDS provisions, net post-tax return, cash flow after taxes. 8. Seek independent professional advice. Where appropriate, investors should consult chartered accountants, advocates, financial advisors, tax consultants. Independent advice helps investors make informed decisions based on their own financial circumstances. Why is risk evaluation important? Professional investors do not ask only, what return will I earn? They also ask, how is my capital protected? What are the risks? How are those risks managed? What legal protections exist? What happens if circumstances change? These questions lead to better investment decisions. Investor risk evaluation checklist. Before investing, ask yourself, do I understand the business model? Do I understand how my money will be used? Have I reviewed the underlying asset? Do I understand the security structure? Do I understand the key investment risks? Have I reviewed the investment documents? Have I evaluated the governance framework? Have I calculated my post-tax return? Have I sought professional advice if required? Important clarification. An informed investor evaluates the investment, the risks, the governance framework, and the legal structure before evaluating the return. Many investors compare only the rate of return. Professional investors compare the business model, quality of assets, governance standards, legal protections, risk management framework, and post-tax returns before investing. The best investment decisions are made after understanding the investment, not after being impressed by the return. Compliance note. This content is intended to assist investors in understanding the investment structure and associated risks. It should not be regarded as financial, legal, or tax advice. Investors should undertake their own due diligence and seek independent professional advice before making any investment decision. 5. What are the common mistakes investors should avoid before investing? Successful investing is not only about making the right investment. It is also about avoiding common mistakes that can expose investors to unnecessary risks. At GHL India Asset, we encourage investors to make informed decisions based on careful evaluation, proper documentation, and a clear understanding of the investment. Before investing, investors should avoid the following common mistakes. Common mistakes to avoid. 1. Investing only for high returns. A high rate of return should never be the sole reason for investing. Investors should also understand the business model, the source of returns, the associated risks, the investment structure. 2. Not understanding the business model. Before investing, investors should clearly understand how the company generates returns, how the investment proceeds will be utilized, the expected source of repayment. Never invest in a business that you do not understand. 3. Ignoring the risk factors. Every investment involves risk. Investors should carefully evaluate market risk, liquidity risk, legal risk, regulatory risk, execution risk, credit risk. Understanding risk is just as important as understanding return. 4. Not reading the investment documents. Investors should carefully review the offer document, debenture trust deed, debenture subscription agreement, other relevant transaction documents. These documents explain the rights, obligations, investment terms, and risk factors. 5. Assuming secured means risk-free. A secured NCD provides a security interest over identified assets. However, it does not eliminate investment risk or guarantee repayment. Security is an important safeguard, not a substitute for proper due diligence. 6. Ignoring tax implications. Before investing, investors should understand taxability of monthly interest, TDS under the applicable provisions of the Income Tax Act, post-tax returns, their own tax obligations. 7. Investing without assessing personal financial needs. Investors should consider whether the investment aligns with their financial goals, investment horizon, liquidity requirements, overall financial plan. Since GHL secured NCDs are redeemable only at maturity, investors should ensure that they are comfortable remaining invested for the agreed tenure. 8. Hesitating to ask questions. A responsible investor should never hesitate to seek clarification. If any aspect of the investment is unclear, investors should ask questions and obtain the necessary information before making a decision. An informed decision is always better than an assumed one. Why are these mistakes important to identify and avoid? Many investment losses occur not because investors lacked opportunities, but because they made decisions without fully understanding the investment. Avoiding these common mistakes helps investors make more informed and confident decisions. GHL Smart Investor Checklist. Before investing, ask yourself, do I understand the business model? Have I evaluated the risks? Have I read the investment documents? Do I understand the security structure? Have I considered the tax implications? Does this investment suit my financial goals? Am I comfortable investing until maturity? Have I got answers for all of my questions? Important clarification. Successful investors are distinguished not only by the investments they make, but also by the mistakes they avoid. The biggest mistake an investor can make is investing without fully understanding the investment. Knowledge is the first and most effective layer of investor protection. The best way to protect your investment is to avoid preventable mistakes before you invest. The GHL Investors Pledge. I will never invest based solely on returns. I will understand the business model, evaluate the risks, read the investment documents, assess the security structure, consider the tax implications, and ask questions before making any investment decision. Compliance note. This content is intended to educate investors and promote informed decision-making. It does not constitute legal, financial, or tax advice. Investors should undertake their own due diligence and obtain independent professional advice where appropriate before making any investment decision. A great investment isn't just about choosing the right investment, it's about knowing exactly what happens from the moment you decide to invest. In the next episode, we'll explore the basics of operations and investor services in GHL India Asset Secured NCDs, including how to invest, the documents you'll need, KYC, allotment updates, and how your returns are paid. Know the process. Invest with confidence. Join us in the next episode.